management at Astral Poly. They are joining us after their numbers. So first, let's start with the new expansion. I saw in a report that you're looking to enter new areas by FY23, and you have started to already internally start to do some tests for that. Can you just talk to us about what are you looking to get into and how big an opportunity is it?
I think we have done the announcement of entering into sanitaryware in the faucet area. And the market opportunity for both put together is more than 25,000 crore opportunity. And Astral being a brand which is known at a nook and corner of the country. So we feel that we will be in a position to take the highest advantage of the market and our reach. Almost you see, we have a 33,000 plus dealers, and out of that, 70% of the dealers are selling these products. So it will be an easy extension of our, I can say, the product. And we are expecting that this sector will give us a reasonably good growth in the coming time. And we have done recently the announcement that we are going to start this business from May 22. So we are going to launch this product in the month of May 22.
So you're going to launch a new program from May 2022. Good morning. This is Nayantara. So talking more about the budget, there's so much in there for piping companies like yours, right? Like, for example, Hiranand Savlani. What kind of a capex program increase are we expecting from your company?
So I think in this budget, a lot of announcement being done, which is good for our company. Jal Nal, they have allocated 60,000 crore, and Pradhan Mantri Awas Yojana, they have allocated 48,000 crore. Plus, they have announced the capex of 7.5 lakh crores. So I think these all our products, announcement is going to support all our products, whether it is a pipe product, whether it is a sanitary or faucet, whether it is a plastic storage tank, and our newly acquired business or infrastructure product, double wall corrugated pipes. So I think across the board, we are expecting the budget was excellent for us. And in the coming time, our company will take the highest advantage out of these announcements.
But the question is that, and what we've been waiting for are the green shoots for the capex cycle in the private companies, which is now expected post-budget, that smart spending on infrastructure, etc. But will companies like yours increase capex when you are also looking at margins being squeezed out thanks to higher raw material prices, not maybe having the full ability, the consumers not having the full ability to take on higher costs, etc.?
So we are continuously doing the capex for our company. If you see this year also, we are targeting to spend more than 200 crore rupees. So we are continuously in an expansion mode. And next year also, we are going to spend more than 100 crore rupees for the expansion activity across all the businesses, whether it is the pipe, whether faucet sanitaryware, whether our adhesive business, or whether our infrastructure business. Across the board, we are continuously doing the expansion. And today, our capacity utilization is roughly about 55,000 percentage. So overall capacity utilization is low, but still we are doing the capex to decentralize our businesses because pipe industry carry a lot of air than the weight. So because of that, decentralization of the plant is helping us in a big way. So that is why now we are entering into the East plant, and our this production trials are going on in the month February, and from March onward we are going to start our commercial production over there. So I think continuously we are expanding. After this government announcement, I think we are getting more excited that if these are going to be spent, because ultimately it depends on the execution, how announcement is already being done, how the government is going to execute that part. That is where the catch is there. If they are going to spend that much of money, I think the numbers will be very, very robust in the coming time. And we are very excited with that announcement.
Okay, so you sound very optimistic on your expansion plans and capex plans going forward. But Mr. Savlani, there has been a high fluctuation in the raw material prices as well. So how do you see that playing out and impacting your margins, your profitability going forward? And what is being done in order to mitigate the impact of the high raw material price?
See, this is the across the board that phenomena is going on, not only in India, but across the globe. This scenario is that the highly fluctuating environment is that. But being an organized player and being a brand, the biggest advantage to us that we are able to pass through that, whatever the price rise is there. And that is why you see in this tough environment also, we have maintained our EBITDA margin. Hardly 1% plus minus is happening. If you see our 9-month wages number compared to last year, I think we are moving somewhere around 18-19% kind of EBITDA. So it has not affected us much. Whenever price rise is taking place, we are passing to the market, and whenever there is a fall, we are also reducing also the price for our customer. So I don't think it is affecting big way, but it's not good for the industry because it is very difficult to predict your business when there is so much of highly volatile environment. And many times what happens that the dealer shy away to do the stocking of their inventory. And that is what exactly happened in the last quarter. From the month of November, there was a high rumor going on in the market that the polymer prices are going to go down. So all have stopped buying. So that also affects the business, and that is why it is not good for the industry. But otherwise, see, for an organized player, passing through is not a big challenge. And that is what exactly we are doing. One quarter maybe here and there lag effect will be there, but otherwise we are able to pass through the market.
Okay, so despite the unpredictable environment, you're fairly confident of that pass through and your margins remaining intact. Now, moving on, a lot of regional and even unorganized players are facing a few challenges. What are the current challenges that you're facing, and is that going to impact your overall market share? Where does your market share currently stand?
See, if you see in industry in last couple of years is not growing at all. It is a degrowth. Under that environment, we are close to about double-digit growth in the volume terms, I'm telling. If you compare with the other players in the industry, the players who are bigger than us, compared to that also, if you see our number, we are continuously growing. In our recent press release, we have given the numbers also that over last 4 years, our CAGR growth of volume is close to about 10%. No one in the industry has grown up this much of level. That clearly indicating that we are gaining the market share in this environment. And thanks to some advantage of unorganized players are facing a lot of problem because of this highly volatile environment of polymer prices. So because of that, there is a huge increment has taken place in the working capital requirement. If you see the polymer price, PVC is more than double. So in that environment, it is very painful for the unorganized player to sustain in this environment and allocate additional working capital. So this is helping us in a big way. And that is why we are growing and we are taking the market share. Though the industry is degrowing, but still we are in a double-digit growth.
Right. So, Astral year after year has been growing into double digits. Profitability has been stable to slightly higher. Can you just talk to us about your current market share in the organized space and where can you see it over the next 5 years?
I think our current market share is still very low. We have to do a lot hard work to gain our market share. In the piping sector, we are close to about 7% market share, which is very low according to me. Looking to the size of the industry, we see that another 10 years, we have to do hard work to get a reasonably good market share, maybe a double-digit market share over a next decade's time, or maybe 7-8 years. So I think a lot of hard work and pain is required to gain the market share. And if you see the adhesive, there our market share is hardly 4%, which is also a very small market share. This year, first time we are going to touch the 1,000 crore mark in the adhesive business. So I think across the board, the opportunity is huge and continuously we are growing the market share, and you can see year on year we are improving our market share, and this phenomena will continue for the next decade also, and we will be in a reasonably a decent market share in the coming time.
Right. So if we just talk about the long-term phase, hyperinflation, hyper price hikes, all are a part of the business. Do you think over the next 3 or 4 quarters, things will get stabilized as far as higher input cost is concerned, higher, whatever price hike you can be able to pass at a decent demand growth? You think that over this year and probably next year, it'll be all about getting back to the pre-COVID levels in terms of growth and demand?
I think it is very difficult to predict that the prices will come down to the pre-COVID level. We don't expect that in next 12 months, the prices will come down to the pre-COVID level. Prices will remain high only because the way demand-supply gap is being created globally and a lot of supply constraints are going on, a lot of shipping-related issues are going on. It seems difficult that in next 12 months' time, it will come back to the pre-COVID. But definitely from here on, some improvement definitely will be there, but cannot be a pre-COVID level. As far as this demand is concerned, I don't think demand will be the problem. A country like India, we are expecting a good demand in the coming time. You see the how fast this ready inventory of the units are going down in the country. All the developers are announcing quarter on quarter the good booking number. So when the ready units will be sold out from the system, then they have to go for the new construction. Otherwise, there will be a shortage of the houses. So we are of the view that the way speed this ready units are reducing, the demand will also come in a big way in the coming time for the construction side. And we are of the view that our term normally come with leg effect, because when the structure of the building is ready, then only you need the pipes or maybe faucets or maybe sanitaryware. So our demand always comes with some lag effect. So we are expecting from the next year onwards, second half, we are expecting that our numbers will be much better, because by the time the construction activity will be in a full swing, and we should be getting advantage out of that.
Okay, so we're going to leave it at that. Of course, we've seen Astral share price surge after the earnings beat as well. And now you all have an idea of what to expect going forward. Post that smart spending by the government on infrastructure, companies like Astral, of course, will be benefiting.